28 years. That's how long Realty Income has been paying their dividend and growing it year on year. Welcome to the channel. Thank you for joining me. Today, we're looking at none other than Realty Income Corporation. Ticker symbol O, very iconic one. Traded in the New York Stock Exchange, so it's a US dividend stock. But nonetheless, it is a fantastic stock all round, especially for dividends. It is impossible to compete in some respects because their track record is flawless. It is quite insane. We're going to look through what they do, who they are. We'll go through Simply Wall Street, Dividend Max, look at their intrinsic value, and everything and all of the above. So this was one of the most, how do I put it, requested companies in the whole time I've had the channel. Everyone wants to know when I was doing a video on this company, because I did Stag. Now, Stag was one of my first ever videos, and I will be redoing it because I don't go into as much depth and wasn't half as confident as I am now looking into companies. So today, and the market's live at the moment, 30th September, we have $57.82. Now, for anyone in the UK, I just want to point out, this isn't 57 cents, this is $57.83. If you're a UK person, you've seen that, you think it was 57 pence. Just the way the different systems works, these are in complete dollars. So, dividend yield of 5.13% at the moment. And the year to date, they are currently down 18%. As you can see, in the last month alone, there's been a real drastic decrease. Now, that's because there is an oncoming recession that's, coming onto the scene alongside a lot of economic problems, energy war. There's a lot of things going wrong at the moment in the world, and they dropped from what was a height for Realty Income. They were trading at almost $75, which if we see their max, that was only beat by $77 just before the pandemic hit. Pandemic hit, boom, it drops down to $42. So right now it's sort of, it's not at COVID levels, but it's quite bad. It's not great. Anyway, it's not great for them. So they are a REIT. What is a REIT? A REIT is a real estate investment trust that invests in freestanding single-tenant commercial properties in the US, Spain, and the United Kingdom. Now, one of their biggest customers is, of course, Walmart. I have lots of graphics, so let's jump right into the Motley Fool, where actually stumbled across them. For example, this is one of the headlines: 2 of the safest dividend stocks on the world, by Stephen Wright here. Now, companies cut dividends, share prices dive. There's lots of issues with dividend investing. Like any kind of investment, it's risky, problems can happen. The reason Realty Income is seen as such a safe bet is because of its track record. It's an aristocrat, so therefore it has at least 25 years of increasing, and they have 28 years of consecutive annual dividend increases. That's really unheard of across the board. UK, everything. The UK have only started doing REITs in the past decade, so there's no one even close. Well, I think there's a few UK companies that could come toe-to-toe with that number, but in terms of a REIT, it is pretty amazing. Now, jumping over to their website, one of the best places to learn about a company if you're looking at investing into them is, of course, their website. And more importantly, for people investing, their investor relations. It's usually listed as either investor relations or investors on their website. But I want to have a look at Realty Income. Who the heck are they? They are known as the Monthly Dividend Company. That's actually copyrighted, which is pretty impressive. In the S&P 500, so one of the big players on the New York Stock Exchange, their goal is to deliver a dependable monthly dividend that increases over time. They're supported with huge cash flow with long-term net leases of over 11,500 real estate properties. Now, there is a wee graphic, which I'm actually just going to show you here because I like graphics. Graphics are easy and really good at explaining things. Their portfolio diversification is this. 4,378 of the properties are retail, sorry. 79% of their rental revenue come from this. They have some industrial, some office, some agriculture. They've actually cut the office off. I've done a video on that company, Orion Office. They spun it off and all their offices are now now part of Orion Office, a new company. You got some shares of them if you owned Realty Income at the time, and their stock took a wee bit of a dive on it, but nothing they couldn't recover on. Jumping back to their website, I want to go through here, have we look. 15% compound annual total return since 94, 4.4% annual dividend growth rate, and 627 consecutive dividends declared. Now, look at that number and tell me of many companies that even come close, especially a REIT, one that is growing so fast as Realty Income. 11,400 properties. The numbers don't lie. They're a juggernaut when it comes to REITs. I don't even think the UK has a REIT that comes even remotely close as to Realty Income. They are across all 72 different industries. They have a massive growth strategy, and their story, they were founded in 1969 in Escondido. Sorry if I butchered that for any Americans, in California. The goal was a simple, generate a reliable monthly income for investors through real estate. Then they went on to started with a single Taco Bell, and then went on to over 11,000 in all 50 states, as well as Puerto Rico, the UK, and Spain. Media library, they have a lot of stuff there as well. Okay, what do we do? Now, acquisitions, asset management, development, and clients. Now, the thing about acquisitions is it's a common practice in most businesses to acquire either other businesses or properties or whatever within your industry. For Realty Income, they focus on acquiring freestanding single unit properties leased to an industry leading operator under a long-term net lease agreement. That means quite a lot of their customers are big established companies because they want long-term net lease agreements. For that, normally you need an established business, but they do have a massive diversification on who those customers are. Walmart only takes up 23%. Am I right on that? I'm nearly sure I'm right on that. Let me see. Diversification overview. Grocery stores takes up 10% of their portfolio, followed by convenience stores, dollar stores, quick service restaurants, drugs, casual dining, home improvement, health and fitness. I think a lot of LA Fitness is also owned by Realty Income, general merchandise, and automotive services. Their top one is Walgreens, actually at 4%. Take back what I said about Walmart. Walmart sits down at 1.7%. They have General Dollar, 7-Eleven, Dollar Tree, FedEx, Sainsbury's, so clearly they must own a few of the Sainsbury's over here in the UK. BJ's, B&Q here as well. AMC Theatres, Red Lobster, Regal Cinemas, Tractor Supply, Tesco. Tractor Supply, a really interesting company I'll be looking at soon, as well as Kroger and Home Depot. In fact, most of these companies will get a video very soon. So this is a company who rents out to a lot of other companies that pay good dividends. Good wee circle of life we got going here. Top 10%, 10% of their region or of their portfolio is in Texas, followed by 9% in the UK and 6% in California, Illinois, Florida. That's good wee diversification. Most, of course, is retail and then industrial. They don't even mention the office. As I said, it was spun off as Orion Office. Be sure to check it out. Orion are definitely an undervalued company and plenty of potential with them. Coming out of the pandemic, I was really, really happy about Orion Office, but now that the economic downturn and all, still an interesting look nonetheless. Geographically, as you can see, 43 properties in Spain, 151 in the UK. Zooming in here. Oh, I thought it would zoom in to actually tell me what they had there, but that is no problem. We've learned quite a lot about them. Featured properties and clients. Sainsbury's. Love how they've just thrown are we Sainsbury's up there? Blue chip grocery operator. Okay. Asset types, well, we know what they are anyway. Mostly supermarkets and, one massive building, or, well, say any size of building, one client, simple, easy, straightforward. Let's see their investment proposition. So it goes on to say about their 53-year track record. Of course, then it goes on about the 627 months. We've read through quite a lot of them, but this is one of the graphs. Dividend Max tells a very similar story, but this one is actually a much larger graph. If you owned one share in 94, you'd have got 90 cents a year for that share. By now, you're earning $2.97. They pay monthly. Forgot to throw that out there. They do indeed pay monthly. Now, for a lot of UK investors, we might be like, monthly? What is that? Because in the UK, it's normally every 6 months or every quarter, so every 3 months. But no, these guys do indeed pay monthly. So if you want to pick up for a dividend that will pay you every month without fail, it is Realty Income Corp. Okay, let's see what else we can jump on to. Time to go to Simply Wall Street, one of the best platforms for researching any kind of stock, and this one is no exception. So let's see here. Rewards. What's the good things about this company according to Simply Wall Street? They're trading at 64% below their fair value. Now, their fair value on Simply Wall Street is based on a discounted cash flow model, and I will be looking at intrinsic value in the next page. It's not as close as this, but it's good to see several different models. On the snowflake analysis here, it goes through 5 things. The value of the company is a 3 out of 6. Futures a 2 out of 6 on 6 checks. Past 3 out of 6. Financial health 2 out of 6. But dividend scores solid 6 out of 6. A 6-star dividend payer and a fair value. Okay. Let's see here. High reliable dividend. Interest payments not well covered by earnings. Sometimes rates are mentioned. The risks for rates are a bit stranger. They're not similar to most companies. REITs do have to give out, I think is it 90% or 100% of their profits to investors. One of the two. It's either 90 or 100%, but yeah. Pay ratio 63.7. Super high. Earnings 561 million, market cap 35 billion. Compared to some, the industry average or peer average is 18. Industry average is 25. I think Vici Properties is very close as well. Where's Vici? Vici sit here. They own a lot of casinos. They have a pay ratio of 45. I don't know. I didn't see Stag when I was looking through them all earlier, but that's quite a high pay ratio. Very, very high, even to the industry standard. But, if you look past that, their dividend potential is quite something. Yeah, as you can see, 64% undervalued. They believe it should be around 162. Now, thing about that is they've never come close. As I said, the highest this company's achieved in overall value of a stock is $77. But that's brilliant because it feeds into the intrinsic value measure. Future growth is projected to be quite good actually for them. Yeah. Past performance, again, been growing quite steadily. Free cash flow, I love to throw that in. It says free cash flow. Most of it does, of course, go back to investors as it is a REIT. REIT have to give it out, and yeah. The only problem with this for a lot of my UK viewers is the pound to the dollar is quite bad at the moment. Massive slump. So if you're buying, dollars versus pounds, it's not as great as it was. But their stock, the stock price of Realty also kind of went down. So it kind of sorts itself out. But obviously having the stronger pound a while ago would have been nice. And a lot of US investors have looked to the UK market because of the same thing, because dollars can then buy you quite a bit more than pounds, unlike about a month or two ago. Yeah, under their dividend, perfect, 5.1%, top 25% of the market, it's higher. Forecast to grow in the next 3 years, and you can see dividend per share, which is that wee lighter blue line, has been growing consistently. It's my favourite one. I prefer looking at it than yield. Yield comes and goes depending on the stock price. Dividend per share is the real kingmaker to be looking at. Okay, so earnings payout to shareholders 82, cash to payout 92. Yep, that makes sense. Being a REIT. Ownership, someone sold 7,000, nearly $500,000 worth recently by an individual. And we can see institutions own most of them. Vanguard and BlackRock own a combined 22%. That's pretty impressive, must say. Okay, on to Dividend Max. A useful website if you want to put in how many shares you were thinking of getting, and you can hit this and it'll tell you the monthly payment for that. 50 shares, of course, 100 shares. If just say you had 100 shares of Realty Income, You'd have got a payment every month of $24.80. Currency conversion and about £20, £22 a month if you had 100. Now, that would, of course, mean a £5,500 investment, sort of. Exchange rate and all, put aside. But yeah, they seem to always pay. Their ex-dividend date seems to be the end of every month, and their pay date seems to be the middle of every month. So that's handy, easy to keep track of. For the ex-dividend date, of course, you will have to buy the share the day before, so do take note of that. Let's see here. Yeah, the graphs are perfect. I don't know why it starts at 2012. I'm not too sure why that is the case. But yeah, you can go down and you can see as they just slowly, every sort of 3 to 4 months, they increase a wee bit. And it's been like that for what feels like forever. Down to 2012. It's pretty crazy to see. Anyway, on to intrinsic value. I wanted to show you this because it's one of the main indicators, massive investing juggernauts like Warren Buffett used to measure a business. Now, for a base case, it's $52. So they're actually overvalued at $58 at the moment. Because they're currently, $58. Best case, though, they're $70. Now, $70 is closer to the highest they've ever been. Now, if you're using an intrinsic value model, they're undervalued. But at best case, getting them, as long as they're not at an all-time high of 77, is probably pretty good. But worst case, it goes down to 43. So you can use the discounted cash flow model, and then you'll get, it's like $164 is fair value, or you use intrinsic value and you get, it's actually overvalued by 10%. Now again, different strokes for different folks, different portfolios, different, investing methods. I can just show you them all and you'll have to come to your own decision, as none of this is financial advice. On to the next one. We have Trading 212, the platform that I use for myself. I believe it is available in the US. But yeah, Realty Income, ticker symbol O. You can see the wee graph here. Massive drop from 77 during the peak of COVID. Well, let's say the beginnings of COVID, March of 2020, burrowed into the minds of most of us. But I suppose August 2022 to September 2022 is not looking great for the stock either. Pretty mad. But yeah, gives you a bit of information on the company, then goes on down to give employees, headquarters, industry, market cap, pay ratios, a lot of information. Then it gives you some nice charts about their revenue, net income, and then it goes down to total assets and some of their cash operating. Whoa, that was a lot of investment they spent. How much in investment? $6.33 billion in 2021. Impressive, I must say. I'm very impressed. How much do they pay out in dividends? That's always a cool value to see. They pay out $1.17 billion in 2021. Yeah, it seems every year they're sort of averaging out 850, then it jumps to 960, then 1.17. But yeah, to be honest, definitely going to be part of my US portfolio once I get it going. But I want to have a look at a good few US stocks before I start that portfolio. And I need to keep an eye on the pound and the economy and just general everything. The world's gone a little crazy in the past 2 years, from COVID to war to everything. So need to keep an eye out, but it's going to be on the watch list. I'm going to be having a look at it. And definitely will be in the US portfolio when I start that. But thank you for watching as always. Let me know what you think in the comment section below. Do you have Realty Income in your portfolio? Let me know. And what's your thoughts on the stock? And is there any other US ones you'd like to see, or UK? Just let me know in the comment section. Love chatting away to you. Thank you for joining me. I'll see you all in the next one. Have a fantastic day. Bye-bye.